Hello and welcome to the Module 1 introduction. The purpose of these module introductions will be for us to kind of give you a little bit of a broad overview about what is going to be covered in each particular module. So in Module 1, since this is going to be the first module in Accounting 2, we're going to do a little bit of a recap for Accounting 1, and then we will lead into our new content for this chapter. Now, in Accounting 1, you learned a series of very important core concepts. You might remember your professor saying that chapters 1 through 4 are critical to your success in Accounting 1 and future accounting courses. And if they did say this, they are 100% accurate. In order to be successful in Accounting 2, you must have some of these core understandings in order to really be able to build off of what you learned in Accounting 1. So just to kind of give you a little bit of background, when you were in Accounting 1, those first 4 chapters were teaching you the accounting cycle. So basically, what are the steps that every company takes throughout the year, accounting-wise? Now, as you were going through those steps, you may have noticed that you were dealing with a very specific type of company. Back in Accounting 1, you were dealing with sole proprietorships. So sole proprietorships are individually owned companies. Right? Now that we're moving into Accounting 2, one of the main focuses that we are going to be really zoning in on are different types of companies. So specifically, Chapter 12 will be dealing with partnerships. And then in Chapter 13, we'll go on to corporations. So one of the core things we really want to try to get a good understanding of here in Module 1 is that a lot of these basics are pretty much going to stay the same. So you still need to know the basic accounting equation and how to journalize. You still need to know your 4 financial statements, and you still need to know your closing entries. Now, sometimes there will be some differences from Accounting 1, and sometimes it will be exactly the same as Accounting 1. For example, let's just talk a little bit about journal entries. The basics of journal entries in Accounting 1 will stay consistent in Accounting 2. We still need at least one debit and at least one credit. The debits must equal the credits, and debits must come before credits. So whether you're in Accounting 1, Accounting 2, managerial, moving on to maybe more advanced accounting courses, journal entries are still going to maintain these properties. One area where we will see a little bit of difference is financial statements. So you learned 4 financial statements back in Accounting 1 for sole proprietorship. You learned an income statement, a statement of owner's equity, balance sheet, and a statement of cash flows. Now that we're getting into partnerships, which let's just give you a little bit of background on there. Partnerships are companies where there are 2 or more owners. So when there are 2 or more owners and we're dealing with a partnership, we still have an income statement. That doesn't change. The statement of owner's equity turns into a statement of partner's equity. So essentially, we are taking a look at the equity for each individual partner. The balance sheet will still stay the same, and statement of cash flows will still stay the same. You probably didn't go too deep into a statement of cash flows in Accounting 1. Don't worry, that's Chapter 16 or Module 6 for this course, so we'll get back to it. And then also closing entries. You learned about 4 closing entries in Accounting 1. If it's been a while since you took Accounting 1, you may have learned the 2 entry system, but don't worry, it's not that difficult for the 4 entries. The 4 entries, you're closing revenues to income summary, closing expenses to income summary, closing income summary to capital, and closing drawing to capital. So really the only thing that's going to change for closing entries now that we're in Accounting 2 is we are going to be essentially dealing with more than one partner, which means we are going to have more than one capital account and more than one drawing account. So each owner will get their own drawing account and their own capital account, but the basics are still the same as Accounting 1. Hence why we say it's so important for us to have a good understanding of them. Now for our Chapter 12 content, we will be getting into accounting for partnerships. So again, we're going to be talking a little bit about journalizing and some other important considerations that we have to consider for a partnership. So specifically, some of the main areas you're going to be reviewing in Chapter 12 are going to be partnership formation, dividing partnership income or loss, and the closing entries for a partnership. So as you start going through these main areas in Chapter 12, please be careful that you're understanding the why behind what we are doing. If you kind of take a step back and you understand the big picture, this is going to be 10 times easier for you. Okay. So I'm going to go ahead and leave it here and let you guys get started with some of your study activities for Module 1. As always, please be sure to read the chapter. And if you have any questions, please feel free to let us know. Good work.